Yeah, I mean, I think Korea is one of the most interest rate sensitive economies that you can find. We've seen the central bank governor actually highlight this in the past, where he mentioned that the transmission of monetary policy in Korea is a bit faster than, say, in the US, just given that there's a large stock of there's a lot of debt, a lot of private sector debt, and a lot of floating rate debt. So if you look at debt service ratios in Korea, they are actually one of the highest in the world, I think, just after Sweden and Canada. So we've seen a lot of cooling in domestic demand. Actually, cooling is maybe a benign word. So maybe a lot of weakening in domestic demand just on the back of a lot of debt service payments coming up. And we've seen some household deleveraging also happen. So where households sort of put away funds to service their debt as opposed to spend on other goods and services. So higher interest rates have obviously been a major factor in this, and it's been almost a year and a half since the domestic economy has been quite weak, whereas exports have benefited a lot from this AI-led semiconductor demand. If you look at really other parts
We
of
were
the
just
economy, if you look at construction, that's also really weak.
Indeed, just a moment ago, we were talking about how South Korean tech majors are investing quite a lot of money in AI related investments and products. Is there the demand on the external side? And is it sustainable to be able to warrant such investments?
Right. I mean, we think we're at the very nascent stages of this AI boom. We are going to see a lot of investment in AI, so global spending in AI from, big tech players in the US and across the world. And the economies that we see as the biggest beneficiaries of this global spending on AI are Taiwan and Korea. Korea a bit less so than Taiwan, but we do see this sort of, this AI boom as something that is likely to be sustained. We think there will be a lot of global spending on AI over the next 5 years or so, and we'll start to see the impact on productivity show up in the 2030s. So I think we are going to see a bit of a bifurcated picture when it comes to investment. So in Korea, construction investment is likely to remain very weak. But we'll see electronics-led sort of investment in machinery and equipment remain quite strong. And so far, we've seen has sort of helped the export side of the economy has helped GDP grow quite rapidly, at least in the first quarter. But given how diversified the nature of Korea's export mix is, we think other parts of other goods will come under pressure because we expect weakness in global demand over the coming quarters, partly led by a slowdown in the US. So even if semiconductor exports do hold up well, we think
Yes.
overall export is likely to ease.
Right. So it has been a bright spot for now, and you did flag certainly maybe even a possibility of a pullback in global demand, but perhaps the other risk factor, arguably, is China, given that it has sort of this depreciating currency as well, and its exports have looked fairly competitive. So how are you looking at that angle?
Yeah, that is certainly a risk. We've seen sort of, Chinese overcapacity and partly reflecting weakness in China's own domestic demand. So Chinese exporters have gained a lot of market share. But just given we think that a lot of Korean firms operate at sort of a higher end of the global value chain when it comes to especially electronics. So they are likely to be safeguarded, but it's clearly a risk factor. I mean, the other risk factor that we are also looking at is the US election. So we think if in the event of a Donald Trump presidency, we could see a lot of import tariffs, and that could boost inflation in the US, which could lead to a renewed rise in US Treasury yields. And that would obviously have an impact on Korea, given Korean bond yields are very sensitive to those in the US. So we have seen some cooling in US inflation, but if we do get these tariffs, then you could see a renewed rise in inflation and bond yields in the US, and that could mean sort of a higher for longer interest rate regime in Korea as well.